says planning to start IT services company. That's great. Vasan, may I know what business are you starting or are in the process of starting? Food products manufacturing. Great, lovely. So we will discuss more about what business structures that are there in India and what kind of you know if you're in what will be suitable for your business rather, right? So we'll also discuss about if you are choosing a structure, what are the factors you should consider to choose the right structure, and we'll discuss in detail about what all business structures we have in India and what are the implications and what will be there if you choose each of them and when you should choose all of them. Okay. Also, are you guys comfortable in English or do you want me to mix English and Telugu both? Just leave your responses in the chat so I'll know before I start further into the discussion. English is better. All right, let's go with English then. Yes. So, I think you all might know the what are the basic business structures that are there in India, since you guys have already, like, done your research and someone is in the process of doing it. So essentially, if you are starting small, or if you're new, then you may go for sole proprietorship, which is rather like it's just doing your own thing. It is very simple, very clean. You can use your own PAN card and do it. You don't need additional things to be done for it. Uh, and then if you have someone, or your friend or partner or more than one person to do business with you, then you obviously cannot go as a sole proprietor. So you will have to step up and go with a partnership firm. Partnership firm is really not different, very much different, but it is like more people, so it has a separate act for it. But it also, the liability is actually unlimited, so that is the reason why I said it is like not very different. So if you are starting taking a partnership firm, you're still like you have unlimited liability, which means you are personally liable for any losses that may incur or anything that happens with the firm. So since you will have more than one person, it is like shared responsibility. It has like it has its own benefits and disadvantages as well. So you will have like more people. I'm sorry, my Anand says my voice is breaking. Am I audible now? Is it better? Give me a thumbs up if it is better, so I'll just proceed, or say yes or anything. Okay, cool. So, like I said, each of this legal structure will have its own benefits. It'll have its own disadvantages as well. Like I already said, we'll discuss more in detail about each of them further in the further coming time. So briefly about LLP. LLP is limited liability partnership. It is like a partnership, but it is a little different. It is like a combination of a company and a partnership, which is the reason why it is like limited liability. It is considered as a separate legal entity, and it has its own benefits and disadvantages, which we'll be talking about later further. Okay. And then we have a one person company, which is like a company. It is like a combination of sole proprietorship with company sort of thing. And then we have a private limited company, which most of you all must be knowing because it's very popular. It is a good kind of business if you're going for like large scale, and if you want to or if you have already started and if you want to scale up and you want to go for funding and everything. And it also has legal advantages and sorts. So like I said, if you have to, you should know what to choose. So how do you know what to choose? You need to consider certain factors to assess where which structure you want to choose, right? You just can't randomly choose whatever you want. And the factors that you should be considering are, first one being liability exposure, which it means like if the company is going into debts or if it is going into losses or something is happening, then you should know how much risk are you willing to take. If you are want to be personally liable for it, if you want the risk to be limited to the legal entity, or if you want it to be shared, it, depending on where you're comfortable with or what is your financial or this position, you can choose your liability exposure. So if you want to go with high risk and you are okay with taking that much of risk, then you can go for LLP or one person company or private limited. If you Just a second, sorry. Yes, so if you want to keep it very simple structure, then you can go for like sole proprietorship, which has no complications. It has like no obviously it does, you cannot scale a lot with limit sole proprietorship, but it also has the advantage of not having too much stress or too many debts or too much liability. Then you should also consider tax implications. So you should check how your profits, so you are essentially starting a business to make profits, right? So when you have income, when you have profits, when you get money in, you are also supposed to do your legal thing. You have to pay taxes, and you should know how much your how you want to be taxed, and each of these structures will have its own advantages, right? For example, if you are going as a sole proprietor, then like I said, it is you will be registered under your own PAN number, which means the government is not seeing you as a separate entity. So you will be taxed for yourself. The whatever income your business is generating will be taxed in your name. As against if you're going for a private limited company or a one person company or a larger structure, then you'll have much complex tax structures. Like you have a corporate tax, and dividend tax is like not really there, but corporate tax will be attracted. So how much and where you are at and what scale you want the business to be taken at will be decided on where what kind of tax implications you want to have at this moment. And then if you have to check your compliance requirements, uh, how much, obviously if it is like a legal structure, the you are expected to file your reports. You have to have your registrations, filings, and everything that will followed up after your this thing. So if obviously if it is like a smaller structure, if it is like a sole proprietorship or a LP, it will have like limited requirements by the government, and it will have limited filings that are required by you. As against if you're going for for a company size like private limited company or a public limited company, then you'll have to follow high compliances. So which part do you want me to repeat, like the compliances? Mr. Anand says he wants me to repeat something. Tax. Okay, let me go back to my screen. So I was saying, suppose you are like an individual, you're doing your business. Let's say you are running a very small food stall, okay? And someone said they had the food. Yeah, Watson said they had food business. So suppose you have a very small food stall, and you don't have any partners. You are managing it by yourself, and you don't want to have like complex legal structures or anything. It's just a small coffee shop or something. Okay, so you will be registered as a sole proprietor. So you don't need an ID. So this PAN thing comes, it is important because depending on your PAN, you will be filing your taxes. So if you don't have a supply legal entity for your business, if it is just you, then you will be taxed only if that all of this will be taxed as your personal income, as a person's income, as an individual's income. All right. As against if you go for like partnership, and if you go for like a company private limited company, or a one person company, then you will be taxed differently. The organization, the entity, the legal entity will be taxed, and not you. So you should, in that case, your organization is also paying taxes, and whatever you're drawing from the organization, whatever profits you're receiving from there, or whatever share of profits you have from there, you will be filing your taxes separately as an individual. So you will have to do both of them. All right, I hope it's clear. Yes. So, with the remaining two factors that you should be considering for deciding on what structure you want to go with will be, what are your funding. A lot of us think like, only if I have a lot of fund will I be able to start my business. But no, but if you see, you have so many mm, ways you can raise your funds, right? So you have investors, you have government helping you, you have, if you're going for a partnership, then you have people helping you. So you should be deciding on how much money you have and how much money you're willing to put in your business, or if you have friends and family or somebody having a being there as a partner for you. So you decide based on it. If it is like a bootstrap, totally your funds and everything, then you can go for sole proprietorship. If it is like you have funding, or if you want to like scale up in the future and you have someone's help in something, then you can go for a private limited company or a partnership. All right. And then the last factor you could consider is ownership and control. It's as simple as it is. If you are a sole proprietor, then you are the owner of it. Or if you're a one person company, a lot of people are not involved in that is about it, simple, clear. So, to discuss more about what a sole proprietor is, as we all know it, I think it is very much simple. It is owned by one person, run by one person, and the business and that individual are not separate, like legally. The legal, in legal eyes, they don't see you as different people. The owner is the business, and the business is the owner. So, because of all of this, the tax implications, or the legal implications rather, are very much simple and limited for a sole proprietor. Like your business, you can just have like a nice name, and you don't need to mandatorily register it unless you think like, you want to have it registered for yourself. And you don't have other complications as well. For example, if you go for GST registration, and if you are like a very small business who is just started, you don't need your GST registration. If the registration is only required on if you cross 20 lakhs for your services, if it is a service business, and if it is your turnover crosses 40 lakhs otherwise. And then you have, like I said, you have government benefits or subsidies that are available. And uh, if it is like a physical shop, a physical entity, or an office, then you need a shops and establishment license. And all of this will come into picture only when you scale up. All right, if you're like starting small, like if it is like a very just starting or something, you can always start with like, and also it also depends on your vision, right? If you are just starting but you also see a very big vision for yourself, and you think you will go for like investors and all of that, then in the beginning itself you can go for that kind of business legal structure, right? For sole proprietors, the like I already said a little bit earlier about taxation, you don't need a separate pan card for income taxes. So you will use your own pan card for all your filings. Your It will be filed as under individual filing, so you'll use ITR 3 or 4. And then if your tax liability, even as a sole proprietor, if you're like making a lot of money, and if your tax liability exceeds more than a 10,000 rupees in a year, then you should be paying advanced taxes. And if you have like vendors and all of that and contractors in place for your business, then wherever TDS is applicable, you will be also deduct that. And then moving forward, um yeah, accounting and bookkeeping. Like I said, irrespective of what kind of business you're doing, I think you all should have your books in place. Only it doesn't need to be a very elaborate thing. It can be a very simple maintenance of books that you could do, only to have clarity about what you're doing, where your business is taking, and what kind of expenditures you're incurring, and all of that. But it is also mandatory if you have this conditions, right? If your turnover exceeds 2.5 lakhs, then you will have to go for it, and you'll also be audited. If you like, if your business is doing really well, and if your turnover exceeds 1 crore, or if your presumptive tax scheme is something like, you are presuming that your income is going to be this much, and you will be paying taxes. So in and if you're choosing opting that scheme, then if your income exceeds 2 crores, then you will have to go for audit as well. All right. And then you will, depending on what kind of businesses, this is not like hard and fast for all the businesses. Whatever business you are choosing, or whatever kind of business you want to go for, based on that, your licenses will depend. If you're going for food business, then you'll have FSSAI. Then if you have like international trades, then you have IEC. And then you have local trade licenses and health license as required by whatever business you're doing. So like, only when you decide your structure, you need to understand more about it. uh, the important thing is for you to decide what, where you want to, you should have a clarity of your business essentially. Also, it's always good to have your current account for, even if you're a sole proprietor, because it is uh, and if you have a like separate business name, it's better to have it in that name. For that, you just need your pan cards, you need your obvious documents, KYC, like your address proof, your registration. If you have additional registration like GST and all of that, then you will have those as well required. Then if you are more than one person, if or if you need some help, or if you want to pool in funds, then you might want to go for partnership firm. This is uh it is easier to manage and operate the business, but you'll also have to share your profits and everything. And this has its own separate act, so you have someone overlooking you, and if you have any you have to comply something legally as well, right? For this, the first thing you need to have is whom you want to partner with, and you should know how much of, you should draw a deed with them, right? So a deed is essentially a legal document. It is like an agreement between two parties, or two or more parties, who want to enter into a partnership firm. So what happens here, like in the deed, you what you need here is like, you need to tell your nature of your business, the name of your business, and how much you're contributing to that business. By each partner, you can have like a partner that is only going to do the work, and a partner is going to bring some capital, and so all of that should be mentioned here. If it is like sleeping partner, what a partner has what kind of activity or role playing in. And the most important thing is, you should have your profit and loss sharing ratio here. And like I already mentioned, the rights and responsibilities should be mentioned very clearly, to avoid the complications that may arise later on, may or may not. So if in case of new partner coming in, what are the rules, and what are the things you want to do, and in case of a partner retiring, and in case of a death of a partner, all of this will be outlined in this deed. And it is obviously, it is not mandatory for you to register your deed, but if to avoid any legal complications, or any disputes or anything uh, in the future, it is always advised to register. It's for your safe side, and legally also it's good. So, like I already mentioned, you just need at least two people to start off. It is a partnership, so you need two people, and you don't need. There is no limit on a maximum number of partners, so you can take the number of partners you may need. But yeah, yeah, going forward. Like I already mentioned, you have to have your agreement in place. The agreement is suggested to always be, yeah, it is suggested to be written rather than just being oral. And you cannot have the partners being minors, or somebody who is not mentally stable or who's insolvent to be a party to the partnership, right? Only those who are competent to enter into the contract should the agreement should be made between those people only. All right. And the business activity that this is just for the sake of it. Obviously you should enter into lawful business only, or like lawful meaning just the legal activity should be carried out. Illegal activities you should not enter into partnership and do all of that. You will be like put behind the bars. And then like I said, the registration is it is not compulsory, but it is suggested to register it. The registration is most of the times voluntary. If it is like not registered, then what, obviously the the in legal eyes you're not there, you're not existent, right? Whatever benefits you'll possess legally because of the registration, you cannot enjoy them, right? And if you don't register, and what are the effects of non-registration are the it you cannot take any action in the court. If there is like any settlement or any dispute, then you cannot take it to the court of law, because in their eyes you're not there at all right. And like I said earlier, profit sharing is one of the most important things here. And you have to specify the sharing ratio among the partners in the deed, right? For like if it is like charitable or anything, then there is no profit, so then you don't need to uh, mention it there, right? Then going forward to the so yeah, what is agency relationship is, according to the partnership, every partner is treated like a agent of that firm. Like um partners, they are like you understand the word agency, right? So if the business is seen like a structure and you are like an agent to it. And if you choose, like if there is ABC partnership, and if you choose like A will be running out, it will carry out all the business and all of that. So A as an agent will be doing the business for the firm, right? And also whatever uh, acts that are done by that partner or the agent will be, because the other partners have agreed to it. So they are also binding to whatever he's doing, right? So even because it is done on behalf of them. All right. Like I said earlier, I said sole proprietor has like unlimited liability because it's his own business. It's not like a separate thing. Similarly, partners also have unlimited liability. That means if A, B, and C are entering into a partnership firm, and for example, the partnership is going into losses, then whatever assets are owned by the firm ABC are not the liability is not limited to it. They have the right to hold A, B, and C individually and jointly, like accountable or responsible for paying off those liabilities, right? This is what it means by jointly and severally responsible for all the activities carried out by the partnership. So you're not safe here in simple words. And like I said, the firm is not like a separate legal entity. It is not like a personality on its own. And if a partner, in case of a partner's death, then the business gets terminated automatically. Or even in case of like the business going into bankruptcy, or if someone is like mentally become unstable, blah blah blah, all of that, then the business is like dissolved automatically. And with like, since we have already we have a certain terms and conditions that we have put in our partnership agreement earlier. And if you want to transfer that to somebody, for to an outsider, unless everybody agrees, you cannot do it. Like I said, everybody is equally like accountable and responsible. So you cannot do whatever you like. You have to take everybody's interest into consideration. And if like I said, it is the a partner is also like an agent, right? So he cannot just transfer everything to an outsider with like just because he wants to. You cannot do whatever you like, basically. And this, because it is between two or more people, it you need to know who you're entering into a partnership with. Keeping all these legalities aside, on a in a practical real life situation, if you just randomly choose a person you don't know, or you don't know how that person is, or you're just not sure about, then imagine your business is going to be like all over the place. You don't want that. You want to have like trustworthy, and you're confident about someone. Or it's always better to have people whom you already know to be your partners. Since I'm assuming you guys are like just starting off, you don't want to put yourself in a very complex place where you don't trust that person and you're still in the uh, partnership with them, right? And then going forward, we'll just see, we'll brief it up, we'll see what if you go for a partnership firm, what are the advantages, and if you it also has disadvantages. So what are the disadvantages? Like I said, it is partnership is very easy to form and start, and it does not have like a lot of complications like the the complex structures like the companies and all of that. Your responsibility and everything will be shared, and you don't need to have all the money burden, the capital burden on just yourself. And also, if you there is some issue, you have the flexibility of taking everybody's advice, and going with one that works best for your business. And the disadvantages are, obviously, you it's just not you, so the benefits cannot not be, they're shared benefits. And then like I said, it has unlimited liability to all the partners, so you are also like fully responsible. It some there are some legal benefits that you cannot benefit, because it is not like a legal entity, it's not separate legal entity. So whatever benefits you get for a company, you cannot take it here. And since like it's like a smaller thing, you cannot go for like huge immense massive funding, and all of that cannot, like venture capitalist kind of thing cannot happen here. And then like I said, if you don't know that person, then we are all human beings, so there could be disputes, and then things can be a little haywire there. And if a partner exists, like if I said someone dies, or if it is not clearly mentioned in your agreement, if someone chooses to exit, then the partnership can dissolve. All right. And then coming to like the basic things, the pan it must be named in the name of the partnership, because it is not, you two or more people are there, you cannot take, you cannot choose and pick one person's pan. You have a separate pan for your firm. Then you also have if you choose, if it is like, if you have like employees, and you have like big contractors or even small contractors which require tedious and all, then you have to go for tan registration as well. And then like I already mentioned, it's similar for as sole proprietor for GST. You have the 40 lakh for annual turnover, and if it is services, then it is just 20 lakhs, and you have to have your registration. If you can also have it otherwise, but or we don't want to unnecessarily have all of the compliances to be followed otherwise, right? For like, if you have them, you have to have like monthly filings and all for GST. So your business is like very small, you just have like 5 lakh turnover or something, then you don't need to have that. And then with when it comes to income taxes, partnership firms are obviously they have like a rate of 30% flat, and followed by surcharge and cess. And the form that you'd be using will be ITR 5, and you'll also have you to file your individual taxes as well. And you should definitely, like just like sole proprietorship, you should also get your audit mandatory if your turnover exceeds 1 crore, or 10 crores under certain digital conditions. And also, if you're professional, you're a professional and your receipts exceed 50 lakhs, then you should get your audit definitely done. And also, just like sole proprietorship, again, you have to pay your advance taxes if your tax liability after adjusting all the TDS and everything is exceeding 10,000, then you'll also have to pay advance taxes. And you should maintain your books of accounts. And you uh, if you have so you, if your business is such that you can get some benefits like subsidies, or you get some exemptions or anything under some schemes, then you can get your MSME registrations as well. And if it is required under it's similar to sole proprietorship. It's required if it is a physical shop or something, then you have to have your shop license registrations as well. If you have more employees in uh, or and if you are like, if you're paying remuneration to the partner, or uh, depending on your how your agreement is, you should also have like professional tax. And other, like if depending on the nature of business, just like any other, you will have your FSA license for if it's a food business. And then if you are like internationally doing something, then you'll have your IEC license as well. And um you like, yeah, so we also have like trade licenses. Just similar to the sole proprietor thing. If you if you have like trade going on, then you have trade licenses. Now we will move on to LLP, but Mr. Chand will be taking forward from here. Over to you, Chand. Thank you so much, guys. If you have any doubts, please make sure you note it down. We will be answering your questions later at the end. So please make sure you like write it down somewhere, or you leave it in the chat. We will respond to that as well. Just because we don't want to, bring a lot of conversation in between. That's it. I hope you have clear, and if there is any confusion, just have your doubts, like leave them in the chat. Thank you so much.
Yes, yes, Shraddha. Thank you. Thank you so much for the interactive session. And I hope all the guys has understand what Shava has explained to you. So first of all, my screen is visible to everyone. I have this doubt on this.
Sir, please turn on the video, no?
Yes, I have turned it on. I have turned on the video, sir. Can I rejoin?
But it is not visible actually. I think
Yeah,
Yeah.
I'm not able to see you.
Can I proceed without video?
yeah, sure, sir.
Yes, sir. Yes, guys. So, my dear ladies and gentlemen, we'll move forward to the next concept of limited liability partnership firm. So, till now, Shava has explained about sole proprietorship business and partnership firm registrations and tax compliances and annual compliances. So all those aspects she has explained. So I'm going to explain limited liability partnership firm, one person company and private limited company. So after knowing all the subject, so you may get the idea to decide which business structure is suitable to your organization. Okay. So let's continue. So at least my screen is visible to all of you, right? So please type in the chat box so that I can get to know that if any break in the internet network. So right, thank you. So, it's a limited liability partnership. So the name indicates it's a limited liability partnership firm. So it means the liability of the partners is limited to the partner's contribution. It means so if the partner contribute to the firm, for example, 1 lakh rupees, his liability limited to 1 lakh rupees only. If he contributes 10 lakhs rupees, that his liability is limited to 10 lakhs rupees. So like that, the liability in the partnership firm is limited. Okay. So if you move forward, the limited liability partnership also must have minimum two partners. However, there is no upper limit in the maximum number of partners in the LLP. Okay. Among the partners, there should be a minimum two designated partners who must be natural persons. Who must be natural persons? Can you know? Can someone explain who is natural person, who is artificial person? So I think all of you must have an idea about who are the natural person, who are the artificial persons. Human beings means there must be two partners who must be a natural persons means a company or some other LLP, some other partnership firm cannot be a partner in the limited liability partnership firm. Okay, so and one one of them should be resident in India. So there must be two natural persons, and out of two natural person, one must be resident in India. Okay, so it means one person might be non-resident or NRI. Okay, okay, guys. The rights and duties of designated partners are gone by the LLP Act. Okay, LLP agreement. It's like yes, yes, correct, Anand. Okay, similar to partnership firm and the LLP also gone by its agreement. So all the members, all the designated partners in the limited liability partnership firm come together. They must enter into an agreement which the clauses more are similar to partnership firm. Okay, so but in LLP, the LLP firm is gone by the LLP Act 2008. Okay, it is more legal structure. So features of LLP. So it has separate legal entity just like companies. Minimum two partners, as I said before. It has minimum two partners and the maximum. There is no upper limit in the number of partners. At least one designated partner must be resident in India. So the liability of each partner is limited to contribution made by the partner. I explained this. Advantages of LLP: separate legal entity. So LLP is a separate legal entity, just like a company. The LLP distinct from its partners. The LLP can sue and be sued on its own name. So if I explain this, you can LLP. So as a partner, as a designated partner of LLP, you can sue on the company. Means you can file a case on the company. It means LLP. In otherwise case, a LLP can file a case on its own partner. Are you understanding, right? So if a, for example, if a person is a designated partner in the LLP, that person means a person can file a case on LLP. Otherwise case, LLP can file a person on A. Okay. Limited liability on the partners. The liability of the partners is limited to the contributions made by them. Okay, they are not personally liable for any loss in the business. If an LLP becomes insolvent at the time of winding up, only LLP assets are liable for clearing its debts. The partners have no personal liability, thus they are free to operate under credible business. Low cost and less compliance. Guys, LLP has less compliances when we compare to sole proprietorship firm and partnership firm. And if you compare with one person company and private limited companies, it has more compliances. So it's based on which business structure you are choosing, the compliances cost may depend. Okay. No requirement of minimum capital contribution. So unlike private limited companies, you can invest 10,000 rupees, 20,000 rupees, 1 lakh rupees, whatever you want. So there is no restriction on minimum capital contribution. Disadvantage, penalties and compliances. Yeah, as I said before, so LLP is gone by government by the LLP Act. So LLP has to LLP organization must have to follow MCA compliances. Even if LLP does not have any activity in the particular year, it is required to file returns with the MCA. If it is failed to file the returns, there are heavy penalties will be imposed on LLP. Winding up a dissolution of LLP. So minimum 2 partners are required to form a LLP. If one partner resigns, then LLP will be dissolved. So to avoid this, another partner must contribute. He should take initiative. He should appoint another partner to continue the LLP. Difficult to raise the capital. The LLP does not have any concept of equity shareholders like a company. Okay, so that is the reason. So outsiders cannot invest in the LLP. Angel investors and venture capitalists cannot invest in the LLP as shareholders. And LLP registration. So guys, are you understanding? If you have any doubts, you can ask in the chat box, or after the session also we are available to you, so you can free to ask any kind of queries if you have. Okay. If we move forward to registration aspects, so the designated partner and another partner must take digital signature certificate to form an LLP. So what is digital signature certificate and what is the purpose of it? So if you go into detail, a digital signature is a digital signature which is having their signature token, which is having their signature, which is used for in attaching the signatures. Okay, you must apply for digital signature. This is because all the documents are filed online and are required for digitally signed. If you are digitally signed, then there are less chances of tampering tampering the registration documents. Okay, the cost of digital signatures are depending on the certifying authority. You should obtain class signature digital signatures for 3 years at a time. So along with the digital signatures, digital designated partner identification number. So DPINs are mandatory for the LLP registration process. You have to apply for DPIN of the all designated partners. Those are intended to be the designated partners of the proposed LLP. Okay. The form should also be signed by a company secretary, chartered accountant, or cost accountant in practice. Only, as I said before, only natural person can be designated partners of an LLP. Hence, DPN can be obtained by only natural persons and not artificial persons. It means company does not have any kind of digital signatures. So once if you applied for digital signatures, if you applied for DPINs, then next step is name approval. Okay. So you have to choose a unique name, and that should be processed by the central registration center. If your name is unique, they will approve and they will ask for the remaining documents. So the registrar will approve the name only if it is undesirable to the opinion of central government and does not resemble any existing partnership firm or an LLP, body corporate, or a trademark. So if all the conditions are satisfied, then only the registrar will approve your name. It means your name should not be resembled to any other name, or it should not have any other trademark, etc. Okay. If the register have any doubts on the applied name or submitted documents, they will they will they will reassign for resubmission. So then resubmission shall allowed, and within 15 days they they have to rectify the defects. So once the sub register, so sorry, once the register MCA register send the documents for resubmission, they have to rectify the, means client has to rectify the defects within 15 days. Incorporation of LLP. So once once name approves by the registrar, the incorporation we have to submit the documents for the incorporation process. File the limited liability agreement. So agreement must be filed in Form 3 on the MCA portal. It has to be filed within 30 days. So LLP agreement has to be printed on stamp paper, preferably 500 rupees stamp paper. So sometimes the value of the stamp paper is different for state to state. Okay. Documents required for LLP registration. So primarily PAN card and ID proof of the partners. All the partners are required to provide their PAN at the time of registration of LLP. PAN card act as primary address proof and residential proof. So along with the PAN card, residential proof means it's like Aadhaar card, passport, driving license, utility bills, not more than 2 months has to submit as address proofs. And photographs of all the partners has to be submitted. So as I said, at the time of LLP at the beginning of the LLP process, so if one person is a resident and if one person is a non-resident, to become partner in the LLP for a non-resident, foreign national and NRI has to submit their passports compulsorily. Okay. Those passports has to be notarized or apostillized by the relevant authorities in the country versus foreign nationals and NRIs. So along with passport, foreign nationals and NRIs has to submit the proof of address, which will be driving license, bank statement, and a residence card of any government issued as ID proof containing their address. Means they have to submit address proof of relevant countries. Taxation of LLPs. LLPs are taxed differently from traditional partnership forms. It means so LLP, the tax rate for LLP is 30%, straightforward. Even if you have 10 rupees income, you have to pay 30% on 10 rupees. Okay, flat. Another advantage of LLP is they are exempted from dividend distribution tax. They are not required to pay dividend distribution tax. Unlike private limited companies has to pay dividend distribution tax if it distributes any kind of dividend. Okay. So one more thing here is conversion to LLP. In India, it is possible for partnership firm or private limited company to convert into an LLP. So if you are starting a business as proprietorship firm or partnership firm or private limited company. So for proprietorship firm, conversion into LLP is not possible. For partnership firms and private limited companies to convert into LLPs for any tax benefits or to avoid any tax legal compliances, this conversion is possible. Means this facility is available for only partnership firms and private limited companies. The process involves obtaining approval from shareholders and partners. All the partners and all the directors in the partnership private limited company has to approve in their board meetings to convert it to an LLP. Okay, guys, if you have any doubts, you can ask me. And if we move further regarding legal compliances, so every LLP has to file Form 3 within 30 days of incorporation. It must be digitally signed and filed with the register of companies. And I have explained about a digital signature. What is a digitally signed means? So it must contains profit sharing ratios and roles and responsibility of partners, designated partner and other partners, and their capital contribution. If they have any disputes, those also must be disclosed in the LLP filings of from 3. And along with the incorporation, PAN and TAN application mandate. So nowadays, along with incorporation, register only issuing the PAN and TAN. So no need to worry about PAN and TAN application. It means there is no separate application of PAN and TAN numbers. Okay, but we have to apply for GST registration if their annual turnover exceeds 40 lakhs, and if they have any interstate supplies or online business, they have to register for GST from day one itself. So, do you have any doubt on interstate? What is interstate supply? Interstate supply means is supply is between one state to another state. Intrastate supply means supply within the state. Supply, which means sale of goods or services. Okay. If it is an interstate supply, GST registration is mandatory from day one itself. Okay. Professional tax, if it is applicable, some states like Telangana, professional tax registrations are mandatory. So other for other states, it is depends on state to state regulations. This professional tax is gone by the state act. So that is the reason. If it is applicable, they have to register in professional tax. So income tax return filings ITR 5. ITR 5 is applicable for LLP. Due dates are 31st July. If it is not audited, if audit requirements are applicable, then 31st October is the due date generally, unless it is extended. Tax rates are flat 30% on cess on net income. So unlike sole proprietorship firms, which has tax liability as per slab rates, so LLP tax rate flat rate of 30% means there is no slab rates in LLP. Audit is mandatory if the turnover exceeds 1 crore. Annual ROC filings. So limited liability partnership firms are liable to file Form 11 and Form 8 to the ROC. So due dates are 30th May and 30th October respectively. So in Form 11, they have to file statement of annual return, basic details of LLP and partners. In Form 8, so financial and declaration details of the partner limited liability partnership firm. Okay. Late filing fee penalty. So 100 rupees per day per form. No upper limit. Ladies and gentlemen, if you look into this penalty clause, so you have to be cautious. Means there is no upper limit in the penalty. So starting from 100 rupees per day per form, if you fail to file for 4 years, you have to continuously pay the penalties. So be cautious on this. So LLP has to maintain books of accounts. It can be on cash basis or accrual basis. So mandatory to maintain financial records at the register office. So if I explain this, it has to mandatory maintain its financial records at the register office. For example, if a LLP register at Hyderabad, but if it is maintaining its books of accounts at another branch at Bangalore, then it is not allowed unless if some conditions are satisfied. It has to maintain its books of accounts at its register office only. Okay. So another thing, tax audit. So tax audit is applicable if its turnover exceeds 1 crore rupees. If it is a profession, then 15 lakhs, 50 lakhs limit is applicable. If the LLP makes payments requiring TDS deduction, then yeah, it has to obtain TAN and deduct and deposit the monthly TDS to the government. other registrations. So as Travis said, these other registrations are not mandatory. These are mandatory if the business satisfies the particular criteria. Means if the business is into food business, then FSSA business license is mandatory. Or if the particular business is into import export kind of business, then IEC code is mandatory, like that. And if I move forward to one person company, guys, if you have any doubts regarding LLP, you can shoot in the chat box, or I will move to one person company and a private limited company. And that time is over, but I have to take some extension because some connectivity issues at the starting of the program. One person company. So one person company means only one person as the member of the company. So difference between one person company and sole proprietorship firms. So you might get some doubt regarding what is one person company sole proprietorship business, because sole proprietorship business also managed by one person company also managed by the one person. Then what is the difference? So the difference mainly comes at the point of liability. Okay, the nature of liability carried by both of them is major difference between those firms. OPC is a separate legal entity on its own, which is distinctive from its promoters as its own liabilities and assets. The promoter cannot be held liable personally to pay off the debts of the company, which means in sole proprietorship business, the proprietor is liable for any kind of liabilities, but in OPC, promoter is not liable. This is the main difference between proprietorship firm and one person company. And guys, single member, as the name indicates, so only one person can form OPC. And since it is a one person company, someone has to nominate the director. So the sole member of the company nominates a member, a nominee during the registration of the company. Okay, this feature is unique to OPCs and distinguished from all the types of companies. Means in LLP or any private limited company, this concept of nomination is not available. Only in OPC, concept of nomination is available. So the existing director has to nominate any other person as a nominee, because if he suddenly dies, who are responsible for further compliances, who are responsible for company existing business? So that is the reason the existing director in one person company has to nominate one person. And if you move forward, no perpetual succession. Okay, and minimum one director, no minimum paid up capital, so special privilege, formation of one person company as per Companies Act, this is also, and the conversion of one person company into other companies. So if you want, you can OBCs can't convert into any other types of companies voluntarily. So if the registrar permits, then only you can convert. Special advantages of one person company: OPC don't have to conduct annual general meetings. Since to conduct any kind of meeting, so at least two members are required. That is the reason OPCs cannot conduct annual general meeting. Okay, cash flow statements need not to be included their financial statements. This is also one of the advantages. Directors could sign the annual returns too. A company secretary is not mandatory. Provisions are in regard to independent directors are not applied, because OPC has only one director. There is no concept of independent director and another director. Okay, annual returns. So similar to LLP and private limited company, it has to file annual returns within the due dates by showing the detailed information of shareholding pattern, and company structure and the company balance sheet and the profit and loss accounts and cash flow statements and auditors report everything. So like any other business structure, it has also some due dates. So 31st October, if it is if the audit is required, 31st July, if audit is not required. So as I said before, so annual AGM is not required, but it has to held at least one board meeting in each half of the calendar year. Means for every 6 months, it has to conduct one board meeting. That is enough. So it has to maintain books of accounts. So OPC has to file the KYC of the directors in Form DR3. The due date for the same is 30th September of the every year. And any other compliances are event based. If they need any change in register office, if they want to appoint any director, and if the existing directors are resigning, then DR12 is required. GST filings are mandatory, as Shravan discussed earlier. TDS penalties. Penalties for non-compliance are 100 rupees per day. Private limited company, as most of you are waiting for private limited company. So if you have any doubts in the LLP and one-person company, you can ask in the chat box or after the session. So let us conclude the session as soon as possible, because it's we are already running late. Limited liability company, guys. So nowadays, everyone is moving towards forming a private limited company. So can any of you know the reason? You can mention in the chat box. Otherwise, I will explain. Okay. Restrict to the transfer of shares. So a private limited company cannot transfer its shares to any other person, except in case of one person company limits the number of members to 200. Maximum number of persons in the private limited company are 200 only. So if I revise LLP class, what is the maximum number of members in the LLP? There is no upper limit. But in the private limited company, the maximum number of members are 200. Okay. These are the features, guys. Legal entity. Sorry. It has separate legal entity from its owners. Means if someone has committed any kind of mistake or fraud, sorry, mistake or fraud, then company can sue on its members or directors. It is a separate legal entity. Minimum number of members are two. Minimum two directors are required. Maximum up to 200 shareholders. Advantage. So it is a distinct legal entity. So it can, so as I explained before, it can be sued or to be sued on its own name. It has limited liability of shareholders. So the liability of shareholder is limited to the amount of unpaid on their shares. It has a perpetual. Company's existence is not affected by death, insolvency, or retirement of shareholder or directors. Means if any of these conditions are affected, the company's status will not affect. So if it is continue to exist until it's officially dissolved through legal procedure. Ease of raise funds. If you register a private limited company, it is easier to raise equity shares, preference shares, debentures, or in or sometimes private placements, and some venture capitalists and angel investors also more interested in investing private limited companies because it follows a structured governance and a legal. It has legal recognitions. Uh, More when compared to LLP's one person company, So when it is more secure way to angel investors and venture capitalists to invest in the private limited company. Improved credibility. If you, if I say, if you go to a bank as a proprietor, as a partner of a firm, you might have some less credibility. Uh, in otherwise case, if you say I'm the managing director of so and so company, or if I'm a director of so and so company, you might get more recognition. Means that name indicates more popularity in public point of view. Means you may get more advantage over other business structures. Transferability of shares. So although there are some restrictions with the MCA, shares can be transferred to other individuals with the approval of the board. Right, right. Taxes. So corporate taxes are 25% for private limited company if the turnover is less than 400 crores. Sorry, yes, sir. If it is more than 400 crore, sorry, less than 500 crore, 400 crores. Various business deductions and incentives are also available for private limited companies. Better governance and structures. So, as it is government governed by the Companies Act 2013, it must maintain records, board meetings, and audits. So, as I said, the more privileges comes with responsibilities. So, if you want to enjoy these privileges, you have to accountable for all the board meetings and audits, accounting. So, everything you have to maintain as per the act. You have to accountable for everything. Disadvantage. So higher regularity and compliance burden. Uh, if I say regarding this regulatory compliances, if I say regarding one form, so after incorporation, you need to file INC 20A for commencement of business. If you are not filed within 180 days, you have to pay 1,000 rupees per day penalty. The compliance cost is huge, so you have to be cautious on this. Cost of formation and operation. So cost of incorporating a private limited company is slightly higher than other legal structures. So restrictions on fundraising, cannot issue shares or debentures to general public. So this is the restriction. Unless it is a public limited company, they cannot raise the shares through general public. So and they have to public disclose their documents or financial records through public through MCA to the public platform. Means they cannot hide their financial statements and the business turnover details within the company. They must disclose. Those are accessible to the general public on MCA portal. Okay, complex of winding up process. If you are establishing a private limited company, then exist process is somewhat difficult because so all this legal structure is involved. That is the reason. If you are closing the company, MCA may ask 1,000 questions for this exist process. And you have to maintain accurate and transparent record keeping and compliances. So for private limited company, you have to file annual returns and the financial statements. So auditor must appoint by a private limited company within 15 days of AGM. They have to file ADT 1. So private limited companies has to follow some board meetings and annual general meeting and minutes compliances also. And these are event-based regulations. Income tax filings. So ITR 6 is applicable for private limited company. Due date for filing is 31st October. So audit requirement, if it is private limited company has to compulsory audit as per the Companies Act. So tax audit, for tax audit limits are there, but statutory audit there is no limit. it has to compulsorily audit as per the Companies Act. So for partnership firms and LLPs, advanced tax is liable as per if the liability exceeds 10,000 rupees. But here the advanced tax should be paid as per advanced tax norms. TDS compliances has to follow, and GST compliances, monthly, annual compliances as per their turnover limits. Yes, guys. So this is the basic things related to private limited company. So because the time doesn't permit to explain elaborate in some side headings. So if you have any doubts or any questions, you can ask in the chat box, or after the session also. We are available for some time, me and Shravya. You can ask any kind of doubts. So anyway, we have mentioned all our contacts in the PPT. You can note it down, or I will mention in the chat box. If you have any doubts, I'm available for 5 more minutes. You can ask. Any questions? Okay, guys. Thank you so much. If you have any questions, you can reach out to us.
Yeah, thank you, everybody. Thanks for your time.